Thanks so much for joining us on a Friday. I'm Marlon Bowling with you, and we're going to take a look at our grain market activity in this segment by calling on Brian Hoops of Midwest Market Solutions in Springfield, Missouri, and get his thoughts on what the trade is doing as we head toward the weekend here. We have markets kind of going all directions at times. Brian, let's take a look at these prices here. I can't wait to see your insight on this. Let's look at corn first. Right now on the corn board in Chicago, we are trading about 3 higher on September. So the price is now at $3.69 3/4. Only 2 ticks, count them, 2 ticks away from our high of the day. December corn 3 1/4 higher at $3.84 1/2. Only 1 tick from its high of the day. And now we're almost a nickel off of our earlier low. In fact, slightly over a nickel. If we look at soybeans, they have been on both sides of unchanged today in kind of a wild swinging pattern here. We have the September contract on the beans about 3/4 lower now at $8.86 1/4. It's about 3 cents off of our high of the day, but well off our earlier low by 13 cents. Very jumpy market here. November soybeans down 3/4 at $8.96 3/4. Now to the wheat trade. We'll start in Chicago, where we have September actually down 1 tick at $5.60 1/4. And here again, we have had a trading range about almost 14 cents wide. December Chicago wheat is back to unchanged. In Kansas City wheat, let's take a look there. We have September 3 1/2 higher at $5.72 3/4. That's a nickel off of its high of the day, but it's off of its earlier low by about 7 cents. So again, another wide swinging trading range here. We have December up 3 1/2. Minneapolis wheat right now, we currently have the September up 7 1/2 at $6.18, December up 8 1/4. And in the cotton trade on your new crop December contract, right now on the cotton, we are trading at $86.99 per pound. That is down 184 points. So that's a big move downward today after hitting 89.11. Brian, your thoughts here on this trade? The wheat market kind of slacking off a little bit from its earlier bull run, but it is still higher in Kansas City at least.
Yeah, at least it's a little bit higher here. Wheat is going to have a problem exporting itself. You know, we've got a supply type driven rally, and we've had several of those this spring that's given producers marketing opportunities. But after all that supply buying subsided, then we're left with, can we sell the wheat? Can we, see some demand for our wheat product? And right now, our wheat is priced the highest in the entire world. So there's not much demand for U.S. wheat. And we're just kind of been rallying, banking on that we're going to find a way to sell it. We saw big swings yesterday when the Ukraine said they were going to limit some of their export business, but then we dropped sharply when Russia said they would not limit any of their exportable wheat supplies or their export business. So we're going to be dependent upon our exports as we go through the fall months in here. We're getting this some of the supply news priced into the market. We may not have anywhere to go with our wheat, and that's a real concern I have. So we've been trying to lay off some of that risk to someone else. And Informa's been out this morning. They're talking about the 176 corn yield. That would translate into ending stocks around 1.8 billion if that is true next week, not accounting for any changes in demand. I think that's kind of friendly for the market. A month ago, I think we were talking 179 and 180 type of bushel yield, and those yield prospects have been trimmed right now because of drought type conditions across a lot of the Midwest.
I'm glad you brought that up because we are starting to hear quite a few private estimates about what the actual yields may be from USDA next Friday. And just a reminder, that report, the crop production and the supply and demand report, will come out from USDA next Friday at noon Eastern time and 11 o'clock Central time. The trade will have keen focus on that report all week long next week. Brian, we'll come back here in a moment and we'll take a look at our cattle and hog market activity on the other side of these messages. Come on back. Well, let's continue our talk here with Brian Hoops of Midwest Market Solutions in Springfield, Missouri, and let's turn our attention now to the livestock trade. And we have had a bit of a bounce here in some of these contracts, to say the least. Let's take a look here, Brian. We'll start on the cattle trade. And on the live cattle market right now, taking a closer look, we have the nearby August, which that one goes into delivery mode, I might add, next Monday. It is up $1.58. We're at $110.18 per hundredweight, and it's well off its earlier low by nearly $2 now. We have October live cattle coming in there at 111.65, and that is up $1.70. So we're trading between 110 and 111 and a half or so on those two contracts. Keep that in mind. Make a mental note. We'll come back to that in a second. Let's take a look at our feeder cattle trade. On the feeders, we have August now up $1.18 at 152.38. And we have September feeders now $1.20 higher at 152.55. That's within about 20 cents or so of its high of the day, and basically almost $2 off of its earlier low this morning. The nearbys are the strongest on the cattle complex futures here. And as we look at the lean hog trade, right now on the lean hogs, you have the August lower, but everything else sharply higher. October now up $1.85 at 51.50 after posting a low this morning of 49.35. So that is $2.15 bounce off of its earlier low this morning. And we have December lean hogs now up $1.44 at 46.62. Cattle trade, we see the 110 to 111 range on the futures on live cattle. Brian, are you hearing anything out there in the cash cattle trade as far as rumors today?
Well, we've got a lot of rumors, a lot of bids out there. No cash cattle trade yet. We started off around 110, and those bids have been moved up to the 112 area, and everything has been passed so far on a regional basis, stress basis. Some 173 bids all the way up to 176. Those are being passed, but that's what I would attribute the rally in the live and the feeder cattle to, is this increased bids. It looks like we're going to have kind of a late week trade once again, as there's a standoff going on while the trade hours are in place.
Why do you think the Packers are so aggressive in their bids today?
Well, they probably are a little bit more short bought what they let on. They've been killing at a pretty rapid pace. Some of these cattle here in the short term, we've been putting weights on, and that's not a healthy thing longer term, but in the short term, it gives that appearance that we are a little bit tighter in the numbers because we're keeping cattle off the market. So again, that's a bearish from a long-term standpoint, is does end back month supply to the market here. So in the near term, it does prop up the cash markets, and we're seeing that effects in the last couple of weeks.
Well, Brian, thanks so much. Good to visit with you again, sir. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. We will keep an eye on this market, and we do have some new cutout values. If you have a chance to pull up our beef cutouts, the new prices are higher this morning on the midday update. Choice cuts up 75 cents, and selects are up 86 cents today. Belly market, by the way, Christina, was down about $4.66.